So ESG, the best bet and opportunity for growth for the future. It's one of the industry's most significant opportunities for long-term value. And for the building of trust, but also for sustainable growth. It's one thing that the industry can perform well one year when commodity prices are up, and it'll perform weak the next year when those prices are down. That's clearly not sustainable, and therefore there's a big need for mining companies to start building in ESG into the core of their strategies to create that sustainability for the long-term future. We believe ESG does provide them with increased shareholder value. We've seen that in the share performance of those companies that are outperforming from an ESG point of view. It does create opportunity for product and operations differentiation. And then also in the current environment where there's so much focus on ESG by the funders, it does provide improved access to capital and also cheaper access to capital. The graph illustrates the outperformance of companies that rated high in ESG, so the red top line against the broader market. According to this index, those companies who have superior ESG ratings delivered a 34% average total shareholders return over the past 3 years, which was 10% higher than companies who didn't have a massive ESG focus. Unfortunately, only 4 of the top 40 mining companies are considered or included in that index, and therefore considered as managing their ESG risk and opportunities well. Now, to capture the value that ESG offers, the top 40 miners must focus on at least 2 areas. It is getting ESG firmly into the strategy, but also engaging with stakeholders. ESG for a very long time in the Western or developed world has been focusing on the E bit. I think COVID created a big realization that the social interaction, but also other stakeholders need to be taken with on the journey for a mining company. And the top 40 are really at the moment on the cusp of opportunity to grow long-term value through ESG. It gives them opportunity for market differentiation, access to capital, and then improved shareholders' value, as we indicated. As we said, a real chance to reshape the future when you've got these type of cash flows. So net operating cash flow in 2020, despite the challenge of COVID, went up 9%. Which was just very impressive, and it certainly helped. Dividends went down as companies were conservative and not paying out dividends in anticipation of the uncertainty of what COVID brought. But we believe that'll be reversed next year with many more dividends being paid, and we've seen that in the December reports and the big dividends that were paid. So the mining industry really at the best financial shape in a decade, and we hope that they'll make use of this opportunity to invest in the decarbonization, changing their strategy, getting the ESG agenda right, both on the energy side but also on the stakeholder side, and really to invest and move towards a green economy. So deal value is an interesting one, and the big question that we're asking, and that as journalists you might want to answer is, can the issue really unlock the new deal value? It's an interesting position that we're in. We haven't seen massive new investments by the top 40 into ESG-led type deals. We've clearly seen the disposal of thermal coal assets over the last few years, and that's a trend that continued in this 2021. Anglo American now disposing or listing their coal assets separately and giving that to the shareholders. But all of that's very defensive movements, and we're hoping to see mining companies actually moving onto the offensive and grasping the opportunities in order to get long-term value by investing in long-term strategy. I mean, Fortescue in Australia is a good example of a company putting down $2 billion to invest in the hydrogen economy and looking at different sites and opportunities for that. ESG offers miners a chance to grow by targeting and acquiring advantage assets that will continue to expand in value as a low carbon future. And that means picking on the one side new metals and minerals to mine, on the other side invest in downstream, but also upstream opportunities. And we've seen that locally. Anglo American Platinum's drive into the Platinum Valley. Now they intend to expand on that. So the question is, can ESG unlock new deal value? 2018, we saw big deals really on the back of, on the one side, disposing of coal assets and getting rid of that in the portfolio. 2019, we saw the big gold deals happening, big gold mergers. And then 2020, as one might have expected, very few deals in the top 40 companies. The reality is difficult to do due diligence is when you cannot travel, when you cannot be on site to see actual outcomes. And new green deals, I think it's fair to say, will be smaller deal value deals, but could have long-term massive upside potential for companies. So we really like to see the top 40 getting into battery minerals, getting into rare earths, to supply that demand for the long term that's desperately needed. 72% of mining CEOs plan to pursue organic growth opportunities rather than M&A transactions. And that's not a bad thing, but there is a need to move and reposition. So only 35% of those CFOs would pursue new M&A activity. Now, taking an ESG-led approach to mergers and acquisition, it helps the top 40 identify a new class of advantage assets, and we hope that they'll do that. We hope that mining companies will focus on assets that can improve their ESG criteria, low carbon footprint, and so on, stable government, support of local communities. And they would have to invest in order to get those communities supportive, in order to improve stable government in the countries that they operate in. Then battery minerals represent another ESG-driven opportunity. These are often, as I said, smaller scale assets, and the time frame could be much shorter to realize value, but they need to invest now in order to get that done. And yeah, let's hope that they do invest in those new type minerals and assets that can really generate superior returns for the longer term. We'd like the industry to move ESG to the top of the growth agenda. There will be deal opportunities in ESG that can be looked at. We'd like them to take control of the tax story, as Letitia has articulated, and then really to embrace a new normal, which creates opportunity for them to create sustainable long-term benefits out of the short-term measures that they put in place last year.
Tax is moving up in the agenda, hence globally as well as in our content today. And I think if you look at ESG, people often ask, but where does tax actually fit into that? If you look at the environmental, carbon tax are used as a tax policy instrument to change behaviors. When we look at social, tax contributions, especially in the mining industry, contributes to the building of schools, your hospitals, your roads, your infrastructure. As well in South Africa, we also have our social labour plan expenditure, which also adds significantly to that. If we talk about governance, the focus there is how do you actually manage your tax affairs? Which policies do you have in place? What is your tax strategy? And how high is that on your organization's agenda? I think what is quite interesting is the 39% of the CEOs that is actually saying that they are extremely concerned about tax policy. But then, if you flip that to the other side, the CEOs are actually saying that, tax policy is actually a government issue. And secondly, also, if you look at your tax transparency, only 30% of the companies focused on their tax transparency. And I think what's quite important is, emerging from this pandemic, governments worldwide are really cash-strapped and looking potentially as corporate tax as a way to even the battleground. And I think that also links into what we saw in February with the budget speech, when it was actually announced that the mining entities significantly contributed to shorten the gap of the deficit that we were expecting to see in our revenue collections. Mainly as a result of the commodity prices that increased, the weakening of our rand, as well as, mining companies recently not investing as much in capital infrastructure and therefore not having a lot of deductions to decrease the corporate tax charges. I think, by avoiding discussion about taxes, miners are letting others tell their story. So I think it's very important that mining companies actually tell their own story and use that opportunity to actually have a seat at the table when we look at policy. I think when you look at tax transparency, there are basically a couple of benefits there for our mining companies. It's a reduction in uncertainty. Here also, can governments actually put policy instruments in place to help investment into our South African economy? I think recently we have seen that the junior mining industry has been lobbying for the flow-through share incentive scheme. I think in South Africa, our fiscus are a bit constrained when it comes to tax incentives. We've also seen in the past year and in our February budget speech that the minister actually indicated that we do need to, as South Africa, reduce our corporate tax rate. And the only way that we can do that is actually by broadening the base. And incentives goes against that policy framework. I think, and like I said, but it is important for miners to have that seat at the table and disclose their tax transparency. I think it's also important that they use that as an opportunity to connect with the stakeholders. I mean, there's a huge reputational upside when you're actually transparent about your taxes and showing the difference that you actually make. And I think, by telling their tax story, mining companies can also attract ESG investors. And I think to summarize, it is basically, we are saying is take control of your tax story. If you don't tell your own story, somebody else will tell it. And I think this tax transparency gives miners the opportunity to highlight the significant financial contributions that they actually make. And also, as an ESG metric, it isn't merely just about reporting, but it also includes companies showing that they are actually open about their tax policies, about their tax risk management, as well as their governmental strategic and how that fits into with their taxes.